Stop scrolling. Everything you thought you knew about the green energy revolution just changed in a single second.
Ladies and gentlemen, what I am about to tell you is being ignored by every major news outlet. And
the banks want you to believe the silver rally is over. They say it is just a speculative bubble.
But in South Korea, Samsung SDI just quietly detonated a bomb that changes everything. They confirmed the production line for the holy grail of energy, the solid-state battery. The media is talking about 900-mile range and 9-minute charging times.
But they are missing the single most important detail that Wall Street hasn't priced in.
The secret ingredient in Samsung's new battery isn't lithium. It isn't nickel. It is silver.
To understand why this is an extinction-level event for supply, we must look at the chemistry.
For 30 years, we have used liquid lithium-ion batteries. They have a fatal flaw.
It is called the dendrite, needle-like crystals that grow inside the battery when charging. These dendrites pierce the separator wall, causing short circuits and catastrophic fires.
This is why your EV takes 45 minutes to charge. It must charge slowly to stop the growth.
Researchers tried graphite anodes. They failed. They tried silicon. It expanded too much.
Then Samsung discovered the solution: a silver carbon nanocomposite layer.
Silver dissolves the lithium ions evenly, preventing the spikes from forming completely.
it is perfect chemistry. But there is a catch, a massive supply-draining catch.
You don't need micrograms of silver. You need grams, lots of them.
A standard gas car uses about 15 grams of silver for electronics and switches.
But a solid-state EV battery could require up to 1 kilogram of silver per vehicle.
Let's be conservative. Even at 100 grams per car, the math is terrifying. If just 20% of EVs switch to this tech, it demands 100 million ounces of new silver.
That is more than the entire annual production of Peru.
Where does this silver come from? The vaults are already empty.
We are already in a deficit. Industrial demand threatens to consume 100% of mine supply.
Skeptics say, we will just recycle the old cars. This is a dangerous myth. Silver in electronics is vampire dust. It is sprinkled in microscopic amounts.
It costs more energy to extract that silver than the silver is actually worth.
We are literally burying billions of ounces back into the earth in landfills.
And you cannot print a silver mine. It takes 15 years to start a new one.
Existing mines are dying. The ore grade has collapsed significantly.
In 2005, a ton of rock gave you 15 ounces. Today, it gives you 4.
We have to dig up 4 times more rock just to stay in the same place.
This creates the EV paradox. Governments mandate cars that require metal we don't have.
If silver hits $200, the EVs become unaffordable. The transition stalls.
So governments will likely declare silver a strategic critical material.
They may prioritize Samsung and Tesla over you, the retail investor.
But there is one mechanism that breaks this suppression: the Shanghai Arbitrage.
While New York smashes the paper price, Shanghai physical premiums are exploding. Traders are buying cheap in the West and selling high in the East.
This drains the Western vaults and forces the true price discovery.
The banks are playing a paper game. Samsung is playing a physics game.
And physics always wins.
So what is the strategy for the investor watching this unfold?
Do not buy numismatics or collectibles. Samsung does not care about art.
By weight. 100-ounce bars. Industrial-grade silver.
When the shortage hits, the premium on collectibles will collapse.
Look for miners in safe jurisdictions, like Canada or Idaho. Avoid mines in countries likely to nationalize assets when price hits $100. Check the hedging book. Ensure the miner hasn't pre-sold their silver at $30.
The silver carbon revolution is not a story for 2035. It is happening now.
Samsung procurement officers are likely locking in contracts as we speak.
Toyota and Volkswagen will be next. The panic buying won't come from Reddit.
It will come from the largest industrial titans on the planet.
They are hostage to the periodic table. They cannot thrift the silver out.
If they reduce the silver, the car catches fire. Safety is non-negotiable.
This makes demand inelastic. They will pay any price to keep factories running.
We are looking at a future where silver is as critical to the economy as oil.
Imagine if the world ran out of oil and the price dropped. Would you panic sell?
The price drop is a glitch, a gift from the broken paper system.
The banks will try to shake you out with volatility next week.
They want you to get motion sickness and sell your position.
Do not let them rent space in your head. Look at the physical premiums.
If spot drops but the dealer price stays high, the drop is fake.
Knowledge without action is useless. Prepare your portfolio now.
The revolution is just getting started. Don't be on the wrong side of history.
Reporting on the silver carbon shift, this is Sarah Sterling.